Hi, I'm Milton Rendell and welcome to Real News Friday. This week I thought I'd just have a chat to you about a few questions that are constantly being asked of me, particularly in the last couple of months. The first, probably the main question is which direction is the market heading? Well, you've got to keep in mind 2 years ago, or over 2.5 years ago, 3 years ago, we had high vacancy rates, we had very little interest in buyer activity. It was well down, the economy was pretty slow, and things were looking a bit whatever. COVID come along, we know that was a challenge in itself. The government's come along, injected some money into the economy, got it kick-started, it's moving along. It's created a whole pile of new, different challenges which we won't go through, but it certainly has helped certain businesses thrive. But unfortunately, when one part of the economy is thriving, sometimes it affects another part. E.g., hospitality industry is certainly taken a bashing in trying to find part-time and casual staff because a lot of people have moved into the mining industry, etc., etc. So we've got this constant movement around in our economy, and I think we all know that. But if we keep back to the real estate side of it, what we've seen now is we've seen a lot more buyers introduced in the marketplace. One, because obviously they've had more job security. Second is because of the interest rates coming down from where they were. I mean, it wasn't that long ago, interest rates were 7%. And then when they came down to 5%, we thought that was pretty amazing. When they came down to 4%, we thought that was incredible. Then we go down to 2%, and just every man and his dog decided they wanted to buy a home. Now we're in a situation where the interest rates are going up. That will cut some of the numbers back down, but that's not a bad thing. That's pretty normal. That's happened in every cycle. And basics are, at the end of the day, it is just what it is. The terms of the building industry, they're still struggling. They're still struggling to deliver product, which is putting further pressure onto the established home market. And that really is probably one of the catalysts or one of the challenges that we have, because they're not delivering as much product as is required in the marketplace, so therefore more people are renting. That's why we're having such low vacancy rates. People aren't moving from homes now, or haven't been putting properties on the market because they can't see where to move to. So it's really a catch-22 situation. So you may get a surge in one area and it seems to slow another area down. So what has been unusual, particularly for the last 18 months, is to have such high buyer activity and such high people looking for rentals as well. Normally it's a little bit, one is usually more busier than the other, but we are starting to see a small increase in properties coming to the market, and hopefully we'll see that to continue, not to slow the market down too far, but just to meet the demand that's currently out there. And the other thing that probably most of us are wondering, what's the benefits or what's been happening? Well, the main thing for most people, for the investors, their equity's been has certainly gone up, because you remember that a lot of investors were hit fairly hard when equity had dropped. In other words, values had dropped in properties. Now the properties are coming back to close to where they were. The other thing that's affecting very heavily into our rental market is the fact that investors are now seeing the opportunity to sell their properties to get the equity out. These are probably people who are going to sell 3 to 5 years ago but couldn't because there was not enough buyers around. Worst thing that's happening at the moment is more than 50% of the people who are buying, what we're seeing, when an investor sells a property, more than 50% of the people are buying are living in them, not renting them out again. So the rental pool's been shrinking, and that's a byproduct of owner-occupiers going into ex-investment properties. So that's been quite a large trend in the last 12 months, and that certainly has affected the availability of rentals. I don't know how we could do the exact count of how many rentals there are in West Australia, but my guess would be that there is less available overall. Not just talking about vacant, I'm talking about actual properties themselves. So let's see where that trend goes, and this is where I think the building industry will answer that problem once they start hitting their straps and starting to deliver product. As more product gets out there, there'll be more investment and more rentals out there. I would think there's been quite a few investors who have bought land and are building that can't get their properties leased because their properties aren't completed yet. So we may I think we're in a lag time in terms of the rentals are concerned. Interest rates going up may remove some of the buyers we have in the market, but we've got a surplus amount of buyers at the moment. So I still think the market will continue for some time. and we'll see how we go from there. Anyway, hopefully that insight gave you some stuff to think about, but still is a very, very good time to invest in real estate, and I think that'll continue for the next couple of years. All the best. Check out realestateplus.com.au.